So new into the hot seat, let's congratulate you on your new appointment, Ali, and let's find out what your plans are going to be, because we've seen a lot of volatility in global markets. That's meant lower valuations of African equities. It's also meant weaker currencies, and despite the market probably being cheaper and more attractive, investors are holding back, particularly foreigners. What are the concerns when they think of Africa at the moment?
Thank you, Lerato. Well, I think firstly and primarily we've got a global risk-off trade. Africa is obviously in the frontier market, the Sub-Saharan space, higher risk parameters than other emerging markets, and therefore it'll probably be a later trade. Obviously, we've seen some of the attempts by governing bodies to stabilize the macro conditions globally. And I think soon after we'll see a follow-through back into our space. Valuation-wise, absolutely. From a dollar perspective, as a dollar investor, you're getting into Nigeria and Kenya 30–40% down year to date. So very, very interesting and very exciting times ahead.
Valuations would be something that drives them in, but as we're saying, everybody's holding back. It's not like investors are looking for yield. And where they have come in, if you look at Nigeria, for instance, they've preferred government securities. What sort of things are going to get them piling back into companies, into equities?
I think the simple answer is growth. We haven't seen much growth coming out of some of these countries, especially loan growth in the banking system in Nigeria, which has been quite pedestrian. I think the recent moves by the CBN over the last couple of days to tighten up liquidity is probably not going to see growth coming through. But the valuation argument is very much there. And I think as investors return to adding risk to their portfolio, looking for alpha globally, some of these companies are going to stand out as spectacular buys over a 3 to 5 year view.
The currency play, what bearing does that have? Because in the midst of depreciating currencies, if you just look at Kenya, central banks have come in, they've introduced a variety of measures, and within that a component of foreign exchange controls. That does not bode well for foreign investors. They want dividends and they want to repatriate their money. They don't want to be dealing with hefty duties on taking their money out. Yeah,
I think some of the moves that the Nigerian government and the Kenyan government introduced are affecting more the local investors and local participants in the market. So as a foreign investor in Nigeria, for example, nothing's really changed for you. You've got to go to the interbank market like you've always done to take your dollars out, and that hasn't changed much. So as long as we're seeing regulation that's not going to impede the foreign investor, I don't think that's going to be a stumbling block for further investment in the Sub-Saharan African equity market. Okay,
well, Nigeria's been fairly progressive, many people would argue. I mean, the lifting on that restriction of foreign ownership by 1 year just makes it easier for investors to come through. But like we said, the capital inflows are not coming in fast and steadily. And then in other cases, it's more draconian, like Tanzania. They're very restrictive on foreign participation. What are the trends like in Africa, and what needs to be done?
Well, I think, as Renaissance Capital, we're on the ground in 6 countries across Sub-Saharan Africa. We work very closely with government, with regulatory bodies. Recently, we opened up the Rwandan Stock Exchange to try and encourage more foreign investment. That's been received very well. I think on the whole, we're making slow, steady progress. Things like liquidity, which obviously impede equity investors. Again, simple things like keeping the stock exchange open longer will obviously help with liquidity. Lowering exchange fees helps liquidity. Clearly, the bigger picture still remains, how do we get more foreign investors to come into these equity markets? And again, I go back to the growth scenario. Nigeria recently concluded its recent census. We're now at 168 million people in Nigeria. These are big numbers. Ultimately, there is going to be phenomenal growth coming through there, and I think the longer-term investors are certainly recognizing that aspect of some of these markets.
It's a bit of a catch-22, though, a 22 situation when we talk about foreign investors, because we need that money coming through, but we also need a lot more local participation. And often, when we've seen the foreign investors just hold back, it's impacted significantly on liquidity. It's happening in Kenya, it's happening in Ghana. There is the argument for the local investor, whether they're coming through channels like pension funds, but local Africans need to be active in this market, and they're not doing it. What are the challenges, and what could we do to entice more people coming through?
You're absolutely right. I think if you look at markets like India and South Africa and Brazil, which have very, very high local participation, that is the key challenge for markets. Now, what we're doing as a firm, we are on the ground. We provide research, sales, trading capabilities for a lot of domestic investors. We are very much in touch with local PFAs in Nigeria, as well as domestic asset managers in Kenya. We continue to highlight the opportunities in the equity market, the ability to construct a portfolio to give you long-term returns. So it's happening. It's not going to change overnight. It's not going to be as developed as South Africa is today, but certainly we are making very, very good progress towards it.
Investors, whether they're foreign or local, are calling out for diverse products. They're calling out for more listings. They're calling out for innovations, different mechanisms to invest, derivatives, short selling, all sorts of other things. It's not happening fast enough. Why is that?
I think again it's working closely with the regulatory bodies in Nigeria and Kenya, in Zimbabwe, Zambia, to try and educate and help grow additional flexibility in the exchanges. So I think, you know, we're getting the building blocks right. We're getting a lot of things right. I think it's going to take a lot of time to help put the systems in place. You know, you can't just suddenly say I want to start short selling, because you've got to put a lot of systems in place to enable that. Derivatives as well. We need systems in place for those developments to happen. So I think we're getting there. You know, this is a very nascent asset class. We've got many years behind emerging markets, and we will get there eventually.
Many people, when they look at Africa, they say, okay, the greatest thing is resources. That's what Africa is good for. And maybe even ITC, because you've seen double-digit growth in that particular sector. When you're looking at the various companies to invest in Africa, is it still those traditional avenues, or are you going off the beaten track? Where do you see growth? I mean,
absolutely, you know, the resource names will always be there. But I think what we're seeing now is developing a fantastic consumer equity market. Nigerian breweries, Guinness Nigeria, two names we like a lot in Nigeria. You've got 168 million people to consume those products. Things like Dangote Cement, which is becoming a Pan-African cement player. They've had their production issues in the short term, but I think they're now over the hump, and going to 2012, phenomenal opportunity in terms of market expansion. But the banks obviously are the key sector across Africa. If you want to play local economy, you've got to play the banks, construction and consumer names.
And in terms of regional hotbeds for investments, obviously Nigeria is definitely a case. Angola, hopefully they'll get a stock exchange up and running sooner rather than later. And where else?
Well, Rwanda's been phenomenal for us. You know, we helped create the Rwanda Stock Exchange in January of this year. We've done 2 deals there, which were very excited. The investment community, we had a lot of foreign participation. Bolero, the Heineken subsidiary, has actually doubled since we listed it. We recently listed Bank of Kigali, which has done extremely well. So I think East Africa remains a very interesting space, and unfortunately it's very difficult to place some of these East African themes. But I think Zimbabwe is doing extremely well. I think more on the unlisted side than listed space, things that we don't get to hear about, but we're very active in Zimbabwe. We've got a very big business down there, which is advising a lot of multinationals in terms of acquisitions. We've just done the recent SR Zisco transaction, and I think, you know, that is a very interesting market. The derivative effect of that deal is obviously a big player in the consumer in Zimbabwe, so Inscore and Delta, 2 names we like a lot.
Regulation, is that still something that foreign investors are wary about when they talk about coming into African markets? I mean, we've seen some lapses when it comes to financial reporting, and we know that there's a big drag because a lot of bourses are not mechanized, they're not digitized, for instance.
I think the more sophisticated investors in the sub-Saharan markets obviously are very familiar with the process. You know, again, the Nigerian stock exchange is trying to make things easier, as are the Kenyans. I think it's all work in progress, and again, people like ourselves, we're on the ground. They're always asking us for advice. We're giving good advice, and hopefully we can help Sub-Saharan equities a better place for all of us to play in.